Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC Community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, folks, and welcome back to another edition of Money in Motion. Seems like quite a long weekend with all the events taking place, but glad to see many familiar faces in the chat. A lot to go over with the new data this week, and of course with some of the rapid moves throughout the weekends. But yeah, Monte, good morning.
Yeah, good morning to you. Good morning to everyone in the chat. Lucas, Jenna, Ross, USC Now. Hope you all had a wonderful weekend. I know I had a nice weekend, and hopefully that continues into this week with the markets cooperating. We shall see. Right now, we'll go over some of the positions where I'm in, some positions I'm looking to take this week, perhaps. For the time being, I think you guys kind of know where I'm sitting, but yeah, that's pretty much it. Morning UIC now. If I forgot to say that.
That's it. Monte's done for the day. Oh man.
Oh no. I got plenty to dive into, but I'd like to give you the opportunity to start yapping first before I go on my,
That's what everybody wants to hear, isn't it? That's sarcasm. I'm not that good at it.
Well, actually, CJ, honestly, I'm very interested to hear what you have to say today because, all of my positions, we were joking before the show, that my positions better than I do because my positions are all COT related. And your COT futures report was made available to our members yesterday. Reading through that, I found some really interesting, I thought really interesting stuff in there and actionable stuff in that COT report. So you want to break down what you were seeing in terms of what we got in terms of new COT data?
Yeah, for sure. So I'll start with the equities market and then kind of slowly filter down through other stuff. But there hasn't been a whole lot of change within equities. You still see pretty consistent positioning within the S&P. And remember, this is the one with the largest open interest. So, it is somewhat important just to kind of have that perspective. But in order to be more bullish on the S&P, I want to see more people, specifically large and small speculators, getting short. And they haven't really puked just yet. NASDAQ, they have actually been selling a little bit in terms of retail speculators. That's been their favorite indice to actually short. Interestingly, the Dow is actually printing a bullish buy signal. The reason why I'm not taking this trade is because large retail speculators are also long. But the overall takeaway of equities is that you have a short signal in ES, you have a long signal in Dow, you have neutral positioning within Russell and NASDAQ. There's just not a lot of edge there. Yeah. And ever since that edge has been out of the market, price hasn't really. It's pretty much the same place it's been trading, since the last 2 months. All right, so let's move down to the next sectors, which are currencies. The dollar is very important here because, with the event risk that we're seeing, I think it's important to pay attention to currencies and specifically the safe havens, which we'll get to. But the dollar is still crowded with long trades. Hedge funds really rushed into this and bought it. And I think there's a lot of vulnerable longs at the top that will have to puke this position if we just keep kind of subtly trickling down here. So, the way that I've chosen to play that, and Monte and I talked about this last week, is via the Swiss franc pair. And so this futures order, Swiss franc is also, Monte and I were kind of joking about this. Not joking, but we were talking about how Swiss franc is, very clearly a safe haven asset similar to gold. So it's kind of lucky that it is breaking out with the remote event risk that we saw over the weekend. But
Yeah.
even if we wouldn't have known that, the positioning was still aligning previously to give us that long signal. And we were getting something very similar in gold. If you look at now, we actually have 100 buy signal. So gold has got the potential to squeeze here as well, maybe back up to like the 1920 level, but we'll see. Either way, the assets that I'm looking at the most in terms of like potential short squeezes or COT trades in the currency markets are gold and Swiss franc. Last thing I want to mention, and then before passing it back to you, Monty, has to do with the soybean position and
Hey.
positioning within soybean oil. So the reason I feel a little bit mixed on this trade, I'll give you two reasons. First of all, we're trending. This is a very clear trend that we're still riding down. And so there's really nothing to change it from a positioning perspective. However, the one thing that does kind of caution me is that a lot of commodities, including soybean oil, will have usually an inverse relationship with the dollar and also a correlation to some of the other family members within their asset class, such as soybean meal. So soybean meal, soybeans, and soybean oil are all very correlated. And we look at the positioning of soybeans, we're actually starting to get crowded with shorts. So, basically the way that I would play soybean oil if I was still in that position is that I would be getting a little bit more cautious because we're having correlated assets start to get crowded in the opposite direction. So just, not enough to bring me out of the trade if I was still in it, but just something to kind of be aware of, I would say, something to have on your radar. Because
Yeah,
the
most
picture,
definitely.
I feel like the picture is sometimes not always clear as we initially think.
No, no, and thank you for that update because that is one of the positions I'm in. So it's good to know. I kind of use you as a weather vane for my trading positions, and that uncertainty I also see it in ZL with, now that we're having retail traders crowd in, it's not looking as favorable from a risk reward perspective, especially when you compare with something like the Swiss franc or even something like in the energy sector, like NRGD or shorting XLE. I think are both two things that are valid options. Next, actually, what I want to hit on next is XLE real quick. Not sure if you saw this one yet today, CJ, but big move in XLE. Let me pull that out.
I mean, I think oil in general just spiked a lot, right? Yeah.
Yeah. So yeah, oil up, XLE up big. So it's going to be interesting to see if this is a sustained move or not. But obviously, this is a massive spike. And when you're talking about things like NRGD, that's going to have a massively negative effect because it is, a triple inverse levered ETF. That being said, it didn't stop me out yet. Still am in this one. This is where, we talked about this last week, but this is where I would stop myself out in NRGD. However, I'm not necessarily convinced that this, we talked about this too. I don't really think you can lend that much credence to technical analysis of NRGD. If you want to do technical analysis, look at XLE. And I'm not too sure that this pump is sustainable. We've come up and we've filled this gap. And now that we have, I think that this is the next gap that gets filled here. So I think we see some downside price action in XLE. That being said, it did spike on the market open, but whether or not that'll be sustained, I think is an entirely different question. And I just don't think that it will be, based on the fact that this feels to me like more of kind of a squeeze of the shorts than it does of genuine market strength. And because of that, we typically see reversals following this sort of formation. So that's kind of what I'm expecting for XLE is maybe one day of continuation, but from there, I think we reverse back down, back towards the 86 level, where that's where NRGD and those sort of things become appealing to me. But that's really all I got from an energy perspective. CJ, I think you did a great job covering the Swiss franc, and also
I have one more thing I
CL.
want to ask you about the Swiss franc, but we'll save it for like the next 5 minutes. I have a couple things about XLE.
No, go ahead and fire away right now. I'll pull up that chart.
No, it's okay. You can leave XLE up for now. Personally, I totally agree with you in terms of CL and like heating oil and XLE in general. I think that, you know, it's going to be important to see how the market responds following, you know, like the initial shock of war or the invasion over the weekend. But interestingly, one of my friends who is not a trader texted me in my group chat last night at 11:30 saying, "What are some good oil stocks? I feel like oil's going to spike hard. New turmoil in the Middle East, Russia already limited, U.S. oil reserves at lowest since 1990, OPEC cutting production. Yeah, that's why it's been going up for the past 3 months." So I always look to kind of fade that. Now I'm not going to right now. And this is one thing I didn't mention in terms of the COT data, but you actually have still a lot of energy longs that have the potential to get sucked in here on this next rally. So I'm not saying that oil or XLE can't go up in the short term. I would personally like to see it show a little bit of vulnerability and maybe create that lower high before looking to add shorts once more. But I don't really like, look, oil could go to 100, it could go to 120, but to me, the risk to reward is still to the downside.
Yeah, I'm in agreement with you. I think that this is just a temporary spike on the back of news, and we've talked about how news-related events tend to fade pretty quickly. I think this one will be no different. I don't think that this is like the first. And I agree with what UIC now is saying that, you know, they missed the first signs of that move. Like all those things that you talked about that your friend mentioned, like the turmoil in the Middle East, those are all priced in. Today, of course, we're getting a jump on the back of the news of the turmoil in the Middle East. But is that sustainable? Is that going to continue to drive price higher? I don't think so. I think we see crude come back down, and ultimately, I agree that the risk and reward is to the downside. So that's all I got from the energy sector. It's kind of tough to talk about today, given the remote events that have been occurring. But if you set your stops accordingly, remote event risks are relatively mitigated. And I'm still in my NRJD position, so. Yeah, but not a whole lot to say about Bitcoin. I mean,
can I ask you? I want to do an educational thing real quick for some of the viewers, given that your options curriculum is coming out this week. Could you pull up the chart? It's FXF, and I just want to talk about like selling a put spread in this particular situation. If so, we've been trading Swiss franc futures. However, if I didn't have a futures account, I could have exposure to the Swiss franc via this exchange traded fund with the ticker symbol FXF. So, if I was to trade this today, which I'm still bullish on, I would think about, looking at a price level maybe below today's bullish engulfing candle as a potential stop loss area. But I would be looking at selling a put spread into this so that you actually have time decay working in your favor. And as long as price doesn't go below, that particular level, you'll make your premiums and it'll be, a constant reward. But Monte, what do you think about this particular setup? And maybe options are the way to play it. Maybe they're not. But, what would you be thinking if you couldn't play futures?
Yeah, no, actually, that's a good idea. Selling puts, I think, is a great way, obviously, like you said, to mitigate your loss from time decay. But for me, I don't think time decay is going to be too much of an issue with this trade. I think this is going to be one that moves kind of fast this week. So one thing I'd consider if I were to trade this, I would likely be buying a call spread, maybe with my first strike being, currently at the current price in the money. And then the next one, shooting for the higher target, shooting for this gap fill at around $99. I think that this is going to be a fast mover. So I don't think you have to worry too much about time decay. But you're right. We have defined a risk here. So in that sense, I think selling puts is a very valid strategy. And although it is moving fast right now, things could slow down. So I think if you're more of the belief that we're going to see something kind of like this on the way up, then yeah, selling puts is definitely the way to go. But if you think that we're going to see something more like this, or more specifically, I guess you could just up to this gap fill like right here. If you think we're going to see something like this, then I think buying, a call spread is definitely the way to go. And FXF, I mean, the Swiss franc, the pair itself just looks really strong. And like CJ pointed out, the positioning is still like retail traders are max short. This thing looks really good, approaching my first take profit level. But I think that the gap that you saw in that chart would coincide with a move of the Swiss franc to about 1.112. So you always got to look at the underlying when you're considering those things, right? And this is the underlying of that of XFX, XFX, XFF. Why is it so hard to say? God damn.
Do you need some coffee, man? Are you
No,
out?
I've had too much coffee. That's the problem. But when you're talking about something like that, you got to look at the underlying. And the underlying to me right now looks very strong, upward trend. And I don't think we'll see all that much resistance until we get up here at the 111 level. So for me, I think buying a out of the money call spread is actually a very valid option for XFX or whatever. I'm not even gonna try again. But I think buying an out of the money call spread in something like this is actually a very valid option, considering the velocity we're seeing out of the Swiss franc, and considering the fact that
Monte's getting excited. Let's run it up.
Let's run it up, guys. Let's run it up. But yeah, no, I overall, I think that either of those strategies will make you money. It's just a matter of your risk tolerance and whether or not you think that what velocity you think it's going to move. Like CJ said, we do have an options curriculum that hopefully will be coming out this week. And that will always be available to members of our Discord, that you can just go in there, reference it. I've done courses on basically every type of options you can trade. So if you want to express your opinion on the market and you don't know how, you'll have this reference. And of course, you'll always have me to ask in the Discord as well. But those are my thoughts overall. So,
man, I'm having fun today. I want to show you something about take profit levels, though. And
all right, let's see it.
So I want to show you an example, because you're talking about Swiss franc and that take profit level at like the local resistance. But I want to show you like an example of soybean oil earlier in the year when we had a massive short squeeze, kind of similar to what we're seeing at Swiss franc right now. But if we were to compare the respective rallies, I would say you were like probably somewhere right here on Swiss franc, based on the positioning. But this thing, I mean, even though it had some tough drawdowns, or even just a couple days of drawdowns, but it really didn't top until the positioning came back to like the 50 or the neutral level. So rather than necessarily look at specific price levels to exit on the Swiss franc, I would exit. I mean, don't get me wrong. You can always take profit at certain resistance or support levels. And I do think that is, wise. But to me, over time, getting out at the right time is all about understanding when the edge in the trade has been basically exploited. So once these longs or these shorts are forced to cover and we come back to a neutral value of like 50, the perceived edge in the trade is gone. And, I let the trend followers take it from there. But I think that could actually work better over time than just saying, one particular support or resistance level, I'm going to sell it all here, because, you know, holding your winners can really, it's very underrated.
Yeah, and there's not a lot of worse feelings than selling too early and then watching the asset rip to the upside while you're sidelined.
It's like worse than a loss, honestly.
It is, you know, getting back into that book that we mentioned, the hour between the dog and the wolf. It is basically the same on your psyche, like missing out on an opportunity that you've been sitting in and waiting, and then you sell too early. That feels the same to your brain as a loss. So psychologically, they're essentially the same exact thing, but that's neither here nor there. But CJ, any thoughts on Bitcoin at all, or do we even want to talk about Bitcoin? Toby, we talked a lot about the Swiss franc. If you want to go back and rewatch the show, the replay will be available. I spent 20 minutes rambling about it. I don't know if that was a sarcastic comment or not, because we did talk about the Swiss franc a lot today.
We also did on Friday, but anyways, Phoenix says nothing is worse than a loss. Objectively, yes. Emotionally, you know.
Yeah.
Because if something goes up 1,000,000% and you don't, you know, anyways, let's move on. What do I think about Bitcoin?
Yeah.
Let's pull up the Bitcoin chart first. What's it even trading at? The one thing that I will say that's really impressive is that we have the crypto equities. Mara, Riot, and Coin are all green, and when you look at the altcoin market, it's absolutely getting destroyed. So, like, clearly to me, the resilience remains within the crypto equities, and this is impressive. Even with the Nasdaq selling off, I mean, it was down over like 70 basis points this morning, and crypto equities were still. What's that line on your chart there?
That was what I was saying. If people got overzealous and tried to short the lows, we might get a bounce. So we're getting a little bit just later than expected, or we saw more extreme price action than expected. But this is from a couple weeks or week and a half ago.
Yeah, I mean, I've been holding Coin through this, and you know, last Friday's price action, you know, we've had some relative strength here in the last 2 trading sessions. So ultimately, we'll see. I've said this before. I said in the weekly report, but I think, you know, if we're talking about crypto in the macro cycle, I give it till about February. I think if things don't pick up in the stock market by February, especially in, you know, in crypto as well, then maybe, you know, I'm not saying crypto can't appreciate, but it's going to be very different than any other like cycle we've experienced before in terms of like the timing, right?
Yeah. Thanks for all the comments, guys, and love to hear what you're trading. It's always good to hear from you guys and what you're trading. But yeah, CJ, I mean, if Coinbase isn't down today, right? Like you got Bitcoin getting beat up, you got equities not looking great, and Coin still, you know, chugging along. That sort of resilience is worth noting, not just because like you know, a trade in the immediate future is going to be profitable, but when Bitcoin starts to move, this thing's going to take off. Like this is going to be the highest beta of all the altcoins in my mind. Because look at this resilience it's showing, despite the fact that equities are down, Bitcoin is down. Imagine when we get that nice confluence between the NASDAQ and Bitcoin and ES, they're all pumping. We get that risk on price action, the dollar's crashing. I think Coinbase will skyrocket. So I think that's going to be one of the highest beta altcoins that you can publicly trade. And I know you've kind of been of that belief for quite some time. So I'm not saying anything new to you, but
it's definitely the retired person's. It's the old man crypto trade, in my opinion. safe, regulated brokerage, publicly traded company. None of this FTX bullshit is going to happen there. So yeah.
Yeah. Oh, I think Phoenix makes a great point here. Your worst enemy is trading, over trading. Talked about that a lot last week. Now is not the time to be over trading. I think now is the time to be making more secular bets. What are your thoughts on that, CJ?
Oh man, I don't know. I mean, I think, look, I can tell you what I'm doing, which I do still have the secular bet on in Coinbase for the crypto cycle. Like I said, that'll be validated in like, February, or, we'll see. I also talked about managing remote event risk in case we do see something crazy. Basically the only point of that is just don't get liquidated and the market maybe eventually will recover. But in terms of like trading, I don't see any short-term trading opportunities in Bitcoin here per se. Mainly I think the best risk to reward plays to the upside right now just remain, CHF and gold currently. Interestingly, Bitcoin has been trading a little bit, or at least last night it was trading a little bit more correlated with gold than it was NASDAQ. So, I still think it's having that existential crisis of what it wants to be or how people want to interpret it. But that's been interesting to watch during this period of stress.
Yeah, still, I mean, come on. It's been since 2008 and still Bitcoin is still having this existential crisis.
Hey, man, that's nuts.
Have a midlife crisis and they just go buy a Corvette or something. Figure it out, Bitcoin. Come on, what are you? Are you gold? Are you speculative? Are you? But speaking of gold, I did want to ask you about that, CJ, because
you concerned about your chain?
Yeah, I'm very concerned. I was thinking about pawning it this week. No, I'm kidding. But I was, like you said, it definitely is like influencing the price of Bitcoin. I think you can't deny that at this point. And I think that when you're doing Bitcoin analysis, you'd be amiss to not look at gold. So what are you seeing in gold from a technical perspective, from a positioning perspective? Because I know you had your eye on the precious metals, the good old Yukon Cornelius silver and gold trade.
Are you going to say that every time we trade precious metals?
And I'll never stop because he's one of my favorite characters of all time. The way he tastes the pickaxe for gold, that is legendary. He can taste the gold on the pickaxe.
All right. Yeah, if we're doing my favorite scene in maybe any movie, it's not my favorite scene, but it is a badass scene. It's the start of There Will Be Blood, when Daniel Day-Lewis is down in the silver mine. He blows up the silver and then spits on it. Oh, yep. There she is. Anyways, what were we even talking about? Oh yeah, gold and Swiss. Gold is the same thing as Swiss franc in terms of setups, in terms of positioning, in terms of technical analysis, risk management. They're both safe haven assets. You could throw the Japanese yen in that basket as well. Those are the safe haven assets. So.
Yeah. I was more so asking, like, if you didn't have any exposures today, what would you be doing with gold? Would you?
I do have exposure. I bought it last night on the opening of the futures. I swapped my Australian dollar position for a gold position. It's at the exact same price it was last night. It's traded a little bit up or down. So we'll have to see if there's continuation throughout this day, but there's no reason why, if the dollar is going to go down and CHF is going to go down, or it's going to go up, gold should follow all of those. And based on how many shorts there are, it could force them out very quickly.
Right. And you get the clearly defined risk, where the trade doesn't work. But good to see it moving in your direction this morning. So I think we could see some serious velocity in this trade this week. Would not surprise me at all, based on the positioning of traders, based on the price action that we saw in the subsequent 2 weeks. I think this one is due for some really rapid price action. So I might get in on that. Maybe exit out of my soybean position. CJ's got me my soybean oil position got me a little concerned about that one, but other than that, I don't got much else. What about you?
Yeah, we'll see how the beans do. I'm not sure yet, but yeah, just want to thank everybody for their amazing viewership today. We really appreciate it. Don't forget to like and subscribe if you enjoy the content today and find it useful. It's a great way to support the show. And also check out tradethechain.com. If you saw our new ad at the start of this show, sentiment indicators, Discord chat where you can bug Monte and I, and we're happy to talk markets and do all that fun stuff. But we're happy to be building an amazing community over there at Trade the Chain. So would love to have you guys join. Regardless, hope you guys have a good day, and we'll see you here we'll have Trading Rebellion later in the day with Nick. So stay tuned for that as well. If not, we'll see you same time back here tomorrow. Take care.